Master Candlestick Patterns, your ultimate trading guide. Hello guys, welcome back to the channel. If you're into trading, investing, or just want to finally understand those green and red candles on your screen, you're in the right place. Today's video is going to be your complete guide to all candlestick patterns and how you can use them to predict market moves, whether you're into crypto, forex, or stocks. We're breaking down everything, from single candlestick patterns like the hammer and doji, to complex setups like morning stars, engulfing patterns, and three black crows. You'll learn how to read them, when to trust them, and how to combine them with other tools to make smarter trades. So whether you're just getting started or you've been staring at charts for years, this video will level you up. Make sure to hit that like button, subscribe if you haven't already, and let's get straight into it. Chapter 1. Morning Star, Spotting the Early Signs of a Reversal. Alright, let's kick things off with the morning star. This is a bullish reversal pattern that typically pops up after a downtrend. Think of it as a beacon of hope in a sea of red. You'll see three candles in this formation. First, you've got a big bearish candle, showing the sellers are still in control. But then, a small-bodied candle appears. This is the market taking a breather, unsure of where to go next. Finally, a strong bullish candle breaks above the midpoint of the first candle. That's your confirmation that the buyers are back in the game. Now, here's the thing about the morning star. It's even more powerful when it appears near a support level. Why? Because it suggests that the downtrend is losing steam and the buyers are ready to defend that level. So, keep an eye out for this pattern, especially after a stock or crypto has taken a beating. It could be your signal to buy the dip. Chapter 2. Evening Star. Don't get caught in the bear trap. Now that you know how to spot a potential reversal to the upside, let's talk about its bearish counterpart, the evening star. Picture this. You're riding a wave of green candles, feeling unstoppable. And then, bam! This pattern shows up. The evening star is a three-candle pattern that signals a potential trend reversal to the downside. It starts with a strong bullish candle. Everything seems great, right? But then, a small-bodied candle appears, indicating indecision in the market. And finally, a bearish candle closes below the midpoint of the first candle, confirming that the sellers are taking over. This pattern is especially potent after a strong rally. Think of it as a warning sign that the bulls are getting tired. If you see this pattern forming, it might be a good time to tighten your stop losses, or even take some profits off the table. Remember, in trading, it's always better to be safe than sorry. Okay, let's talk about a pattern that screams bullish momentum. The three white soldiers. As the name suggests, this pattern consists of three consecutive bullish candles, each closing near its high. This pattern typically emerges after a period of consolidation or a downtrend, signaling that the buyers are back in control and driving the price higher. The key here is the consecutive nature of the candles. Each candle closes higher than the previous one, indicating strong buying pressure. Now, while this pattern is a strong bullish signal, it's crucial to remember that the context matters. Look for increasing volume alongside the three white soldiers. That's a recipe for explosive moves. Additionally, pay attention to where this pattern appears. If it shows up near a breakout point or a key resistance level, it could signal a significant move to the upside. Just like the three white soldiers signal bullish momentum, the three black crows are a clear warning sign of bearish pressure. This pattern consists of three consecutive bearish candles, each closing near its low. Imagine seeing this after a period of bullish euphoria. It's like a bucket of cold water, reminding you that what goes up must come down. The three black crows usually appear after a prolonged uptrend or near resistance levels, indicating that the sellers are stepping in and taking control. Each candle closing lower than the previous one highlights the strength of the bearish sentiment. Now, if you see this pattern forming, it's crucial to be cautious. It could be a sign that the uptrend is reversing, and a deeper correction is on the horizon. Consider tightening your stop losses or taking some profits off the table to protect your capital. Let's dive into a pattern that might seem a bit more complex, but trust me, it's worth understanding: the three inside up down. This pattern is all about confirmation, and it's incredibly powerful when you spot it near key support or resistance levels. So how does it work? It starts with a large candle, bullish or bearish, it doesn't matter for this first one. Then you get a smaller candle, the inside candle, that's completely engulfed by the previous candle's range. This shows indecision. Finally, the third candle is the confirmation. It breaks out of the inside candle's range in the opposite direction of the first candle. This confirms the reversal. The 3 inside up-down pattern is a bit rarer than the others, but when you do see it, it often leads to significant moves. This pattern is all about reading the market's indecision and then capitalizing on the confirmed breakout. And that's a wrap, guys. Now you've got the full playbook of candlestick patterns, from single candle signals to complex multi-day setups, and exactly how to use them across crypto, stocks, and forex. Mastering these patterns can seriously level up your technical analysis game. Just remember, no pattern works 100% of the time. Always confirm with context, volume, and trend. If you learned something new, make sure to like this video, subscribe to the channel, and comment which pattern you'll be watching for next. Thanks for watching, and I'll see you in the next one.